Remarkable yield stabilizes around Strategy's STRC shares as the company keeps an 11.5% dividend yield through May. The tension is the price anchor. STRC is designed to stay close to a nominal $100 level, and April's volume-weighted average price came in just below that at $99.76. The yield story only works cleanly if stability stays intact. The pressure comes from 11.5% yield and $100 area. One is the confirmed signal. The other is the first trigger that can show whether the opening event is becoming a larger operational, market, or user problem. The confirmed baseline is specific. STRC was introduced in July 2025 with a 9% yield, and the yield has since moved higher. Through May, the 11.5% rate has held for a third consecutive month. The share traded around $99.75 after a stable stretch since mid-April. Strategy's decision to retain the rate is tied to that steadiness near the reference level. The baseline should be read through yield decision and $99.76 VWAP. Those details narrow the story to what is established, so speculation does not carry the same weight as confirmed context. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Remarkable yield stabilizes because the mechanism is not only the dividend number, it is the relationship between income and price control. If STRC drifts too far from the $100 area, the product looks less like a stable high-yield cash alternative and more like a volatile equity trade. More frequent payouts could smooth swings, but that change is not confirmed. The mechanism sits in price anchor, with $100 target showing the structural signal behind it. That explains how the event can change access, trust, liquidity, execution, or pricing behavior. The operational proof is payout change. Without that proof, price anchor remains a promising mechanism, but the stronger conclusion has to wait for evidence that the process works under pressure. The impact reaches investors tracking Strategy's broader Bitcoin-linked structure. MSTR closed April at $165, up 33% from the prior month, after a long drawdown from August 2025 through March 2026. Bitcoin also rose 12% in April. Those moves support interest in Strategy's securities, but STRC holders still need the yield and price behavior to stay aligned. The affected side is Strategy stack, and the active scale or condition is MSTR up 33%. That makes the consequence practical because it identifies who needs to adapt and which signal could change their position. The open question is sustainability. An 11.5% yield can attract short-term income demand, but the product's appeal depends on whether the share can remain near $100 without larger price swings. The possible shift to fortnightly distributions is also unresolved. Until Strategy confirms a new schedule, it should be treated as a watch item, not a settled feature. The unresolved item is dividend timing, and the current limitation is unconfirmed shift. Keeping that gap visible prevents the story from drifting into certainty before official schedule supplies better evidence. The uncertainty should be measured against official schedule. If that signal appears, dividend timing becomes easier to judge. If it does not, the current limit around unconfirmed shift remains. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For remarkable yield stabilizes, the next signal is whether STRC keeps trading around the $100 benchmark, while Strategy leaves the yield unchanged or announces a payout frequency adjustment. A confirmed move to more frequent dividends would change how investors read volatility control. Without that, the practical test remains simple. Yield demand must not break the price anchor. The next trigger is schedule update, not a vague promise of future movement. If that trigger arrives with $100 area, the story gains confirmation. If it fails to appear, the earlier pressure remains incomplete. The final readout is not complete without $100 area. That condition links the next trigger to measurable progress, which is the difference between a headline reaction and a confirmed development.